To meet its goal of having 23% of its total energy mix come from renewable sources, Indonesia needs $146 billion in investments from the private sector. To discuss this, we have Mutia Yustika from Institute for Energy Economics and Financial Analysis and Dinita Satyawati from Ember. So, Dinita, how can Indonesia achieve the full potential of its renewable energy sector?
With abundant renewable energy potentials, especially solar and hydro, Indonesia can fully utilize its renewable energy sector by incentivizing project developers and potential solar adopters. Evidence suggests that Indonesia's energy transition should be underway. The government is planning to launch a new renewable and energy bill this year, which will expand its renewable energy capacity in the on-grid system and also do conversion from diesel power into solar and further expand rooftop solar use in the households, in the commercials, and in the government buildings.
Anything to add to this, Mutia?
I agree with Dinita Amber. So, considering the enormous amount of investment needed to materialize the energy potential, the government has also to collaborate with the private sector, especially in project funding. It is being estimated that Indonesia needs around 285 billion US dollar to meet 2030 climate commitment, and private investment will be vital to fill 146 US dollar the investment gap. From the market perspective, as a country of 270 million population, Indonesia has the ingredient to attract more investors in renewable energy projects due to the rising electricity demand. However, renewable energy investment in Indonesia has stagnated over the past 7 years. The latest data shows that Indonesia could only attract around 1.5 billion US dollar in 2023. So IUFA tried to address the reason behind the stagnation of renewable energy investment in Indonesia. And based on our analysis, several policy gaps need to be tackled to attract potential investors into renewable energy market.
If I can add a little bit to Mutia's comments that investment stagnations need to be addressed to policy gaps, I think it's also important if the government can further defines the renewable targets in the electricity sector so that investors can see how much renewables that Indonesia needs, and then they could enter the renewable energy sector fully having confidence in investing in this sector, so both governments and the investors can work together to help Indonesia reach its full renewable energy potentials.
Just for better understanding, are there policy gaps in investments? What's your take on this, Danita?
Well, in the coming months, Indonesia will submit the UN targets for climate for the year 2030 and also for the year 2035. However, this target will also need to elaborate more on renewable energy. But it turns out that in the upcoming new energy policy that will be released later this year, Indonesia will plan to reduce its renewable energy targets from 23% by 2025 to between 17 and 19% by the same year. So this means that the climate commitment of Indonesia in the energy sector might progress slower than anticipated.
Now, how about for you, Mutia?
Yeah, so actually the government of Indonesia already issued several regulations to attract potential investors. For example, by issuing the President Regulation number 112 of 2022, but there are still issues raised from this regulation, such as inconsistency between regulations and lack of transparency in implementation. IUF identifies several regulations and policies that might hinder renewable energy investment, such as a mandatory part system, restriction on the transfer of ownership rights, unfavorable deliver or pay scheme compared to the take or pay schemes, and attractive ceiling tariffs, local content requirement policy that makes the investment cost become higher compared to the global market, a lack of carbon credit incentive, and last but not least is the complicated procurement procedure.
So how should the government address these gaps? Let's start with Danita and then Mutia can follow.
Yes, I agree with the presidential regulation number 112. There still needs some aspects that need to be clearly defined. However, I think that clearly the government can address gaps in investing by addressing 3 points. The first is the quality of state budget funding. Instead of focusing on only strategic discussions, the government should also focus on upskilling and reskilling of the people that will be implicated by the transition, such as workers in the fossil fuel industries. The second thing that the government could address is the critical grid constraints. So the Indonesian grid can absorb more variable renewable energy without having the curtailment or limiting the absorption of solar and wind into the grid system. And lastly, the local approach should be implemented. For example, involving more local governments in the energy decision making would clearly increase their ownership of energy transitions and further incentivize the local government to keep their local economy thriving.
So yes, from IFA perspective, the attractiveness of renewable energy investment is important. So the government of Indonesia should undertake an immediate review of its planning, procurement, and investment process to increase the attractiveness of renewable energy development. Private investors will be encouraged to enter Indonesian market if there were clear and concise procurement procedure, as well as consistency and reliability in the implementation of current regulation. By evaluating the mandatory partner scheme, electricity purchase tariffs, carbon credit incentive, and also the local content requirement policy, the government and also PLN can ensure the return on investment is appealing for investors to accelerate the country transition to renewable energy.
Considering everything that you've just mentioned earlier, tell us your outlook for Indonesia's renewable energy capacity by 2030. Will Indonesia be able to catch up, Danita?
According to the supply plan, the government is planning to install renewable energy capacity of around 20 gigawatts, which will be sourced largely from hydropower, geothermal, and solar. So this plan will be further revised, and then this plan will also be replaced by a newer plan for the year 2024 and 2033, which will increase renewable energy capacity into 75%, and then the rest is from gas. So according to Ember's data, we are still on track to reach hydropower and geothermal target for 2030. However, Indonesia needs to ramp up its solar energy capacity deployment to reach the targeted capacity of 2.3 gigawatts this year. So rather than focusing on a complex, long-term, large-scale renewable energy projects such as hydropower or geothermal, Indonesia should focus more on building renewable energy technologies such as solar or wind.
And what's your take on this, Mutia?
Despite the effort, the current shares of renewable energy in the electricity mix is only 13.1% with a capacity of 13.2 gigawatts, comprising of 94.5% of hydroelectric, biomass, and geothermal. Still well below the 2023 target of 17.9%. It is difficult to confidently say that Indonesia will achieve its 2030 renewable energy mix target. The government of Indonesia currently proposing the revision of national energy policy, which reduced the renewable energy share target in 2030 from 26% to 19 to 21%. So the government of Indonesia needs to continue its effort to provide support and incentive, but also need to adjust its existing regulation and policies to attract more potential investors.
Thank you so much for your insights, Mutia and Danita.
Thank you so much.
Thank you very much.
Once again, those were Mutia Yustika, IEFA Energy Finance Specialist in Indonesia, and Danita Setyawati, Amber Senior Electricity Policy Analyst for Southeast Asia. For more news, visit asian-power.com.